Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. Hopefully everybody doing well. Hopefully everybody is doing well.
When you go to Buc-ee's?
You said, when did I go to Buc-ee's?
Yeah.
We had this whole conversation the other day.
Uh-oh.
We had this whole
I'm sorry.
conversation the other day.
No.
Oh, no.
Yeah.
So when we came back from Houston, we flew in and out of Montgomery. So after we was coming back from Montgomery, Calandra was like, hey, we passed by Buc-ee's in Auburn, on the way home. You want to stop? Because I had never been. So we stopped at Buc-ee's, and I got a t-shirt. I got a little Buc-ee's keychain. I don't feel like getting up to get it. Timothy got a t, because that was me and Timothy first time going. We had never been to a Buc-ee's. Calandra and Chris been before. Everybody been but me and Timothy. So we got us some, and I was wearing this the other day, but somebody wasn't known, I guess, you know what I'm saying, because they didn't see the because that's when I was on the top of my bussy. But we went by bussy. Got me some bussy juice.
Oh God.
Like the one dude on TikTok, he like, I'm out here at bussy. Got me some of that bussy juice. I see signs of Texas. The stars at night are big and bright, deep in the heart of Texas. Y'all remember that on Pee-wee's Great Adventure? Who remember Pee-wee's Great Adventure? I know you are, but what am I?
Yep.
Good evening, everyone. Now that we've caught Deborah up to speed, if this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. But if it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. And if you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That is me, BIGSPIDER, if you do hablo Espanol. And you're in tune to another episode of, if I can find it, BNQ Intraday Price Action Recap. Here. Yes, yes, that is right. That is right. You are in tune to another episode of the NQ Price Action Recap. I got an email from Apex today. Let me see what he said. Let me see what the latest sale is. Cause yesterday was supposed to be the last day for the $49 for the 50K end of day. Intraday trailing drawdown, no activation fee. Yesterday was the last day for that. Apex Trader Fund and Legacy Die Hard. Okay, it's something with the legacy accounts. So let me open that up and see what they talk about. I'm sorry, y'all. I was about to open the email and then some other emails popped in and made it go out of the way. All right. Legacy Die Hard. Legacy evaluation accounts are back for a limited time. Legacy Die Hard. Legacy value. They said the same thing. Are back for a limited time. Back for a limited time. Not back for good. Don't miss your chance. One of the most requested account types is officially back for a limited time. Starting today, your audience can take advantage of 90% off the first month of all legacy evaluations and 80% off recurring legacy months. Legacy months. Remember, the old plans was like a subscription. So you get 90% off and 80% off the subscription. So if you buy the legacy accounts, right? So that means with a 50K account, you can buy it for $19.70 because it's $197. And then if you don't pass it within 30 days, then it'll be a subscription of 80% off $197. Get your calculator, do the math. I ain't doing that math for you. Right? And then the resets are $80. It says legacy lifetime PA fees are $125 through August 11th. So I'm assuming that's all of them are $125. Yeah. So all of them are $125 for the activation fee for the legacy accounts, no matter what size it is. Because it say the legacy PA fees are $125. Right? Legacy has always been one of our most popular account types because it gives traders the opportunity to scale. With the ability to manage up to 20 performance accounts, traders' first payouts could range up to $30,000 on 25K accounts to up to $70,000 on 300K accounts, depending on the account size. Yeah. And there's more. For a limited time, every 100K intraday no activation fee account is available for just $59. Okay, so they done move from the 50K to the 100K, right? So the 100K is now $59 all in, right? The intraday trailing drawdown, no activation fee on the 100K is $59 all in. So it ain't the 50K no more. That was $49. It's the 100K and it's $59 right now. I'm reading this in real time, y'all. They're also, let me see. Let me go back. Whether your audience purchases a single account or a 5-pack, every 100K intraday no activation fee account is just $59, right? And you can do the 5-pack. They $59 for the 100K accounts. So if you into the 100Ks right now, best bang for your buck, $59 for a no active all in on 100K. Use code BIGSPIDER at check. Don't forget, y'all got to use code BIGSPIDER at checkout, right? They'll also receive 90% off all other intraday evaluation accounts and 90% off all end of day evaluation accounts. All right, so 90% off is still there. Remember I told you the 90% probably not gonna go nowhere. So now it's still 90% off. Marketing assets. We already uploaded marketing. Okay. That's for me. Talk about marketing assets for like banners and stuff. This promotion ends Wednesday, July 29th at 11:59 p.m. Right? Legacy, you can get these if you want the legacy accounts, the ones that reset for you, you ain't got to go back in and repurchase. They reset for you automatically after 30 days if you fail it or if you don't pass it within 30 days. 90% off the first month. For the 50Ks, it's $19.70 for the first month, and then 80% off of 197. What is that, like $29? Is that the one that's like $29? Let's do the math. 197 minus 80%. 197 minus 80%. $39.40. So it's $39.40 for each month after that for the 50K accounts, right? If you get the legacy plans, and the activation fee is $125, right? So right now, the best bang for your buck if you're going to buy is that 100K at $59, right? Let's go look at the site and let's see what the numbers are for real. All right, so let's pull up Apex. All right, let me share my screen. My wife sending me pictures of her vegan food on the boat. I asked, I said, what are the shrimp made of? Cause her thing said vegan appetizers, fried shrimp, roasted red pepper, remoulade. I don't know what it is. REMOULADE. Lasagna bolognese, beef ragout, mozzarella, bechamel sauce, whatever that is. Then the entree featured Indian vegetarian aloo gobi mata, moong dal tatka, mushroom, and peas paleo. Peas paleo. I don't know how to say none of that. But I asked her what the fried shrimp was made out of, because when I blow it up, it looks like cheesy puffs. That's what it looked like. It looked like cheesy puffs. Y'all probably can't. I don't know if I blow that up. It looked like cheesy puffs to me. If I blow it up, I don't know if y'all can see that, but see, it looked kind of like cheesy puffs. I don't know if y'all can make it out, but that's the vegan fried shrimp in a dip. But it looked like cheesy puffs. So I asked her what it was, because when I blow it up big, I'm like, that look kind of, it got a little cheesy puff look to it to me. You know what I'm saying? And she was like, great question. I said, what are them shrimp made out of? She said, great question. IDK. That's why I stopped eating them. But the texture did give fried shrimp. All right. So scrolling down here, right there, see, any size evaluation up to 90% off, right? 7 days left, right? You got 7 days and 5 hours left, right? If we come down here, let's look at the 50K. All right, yep, it's back, $79. So they're not $59 no more for the activation fee for all of the PAs. Remember I told you when the like the 90% off may stay, but the activation fee usually go back to what it is, right? So $79 for the intraday on the 50Ks, $129 for the end of day trailing drawdown, right? And then the 100K that is talk about intraday, no activation fee is $59 all in, right? But for the intraday, no active intraday standard, right? If you just bought one normally, right? They $39, and they $39 for the intraday, and then it's $99 for the activation fee. So that what's that? $129. That's $129 if you buy it just straight up the intraday trailing drawdown standard. But for right now, the no activation fee is $59. They got a sale going on for the 100. So that's why I said that's the best bang for your buck right now. If you're looking for the best bang for your buck deal, you know what I'm saying? The 100K is the best bang for your buck right now. $59. I don't know nobody that's beating that right now for a 100K account. Right? Use code BIGSPIDER at checkout when you checking out for any of these right here. All right. So when we what in the world was that? I just seen something flash over there. I just seen something flash over there. It ain't nothing behind that green screen over there that should be flashing. That's a wall. And I saw something flash over there. I don't know what's going on. So yeah, for everybody who was winning for Freebie Friday, right? If you didn't pass by yesterday, right? Now, whatever size account that you went for, your activation fee is back to normal now. If you went for a 50K, it's $79 now. If you went for a 25, it's $69 now. You went for 100, it's $99 now. If you went for a 150, it's $129 now. If you went for the end of day trailing drawdown, right? It's $159, $139, $129, and $99. Those are the end of day activation fees. All right. So shout out to everybody that's been winning for Freebie Friday. Even if you did not pass it while the activation fees were discounted on all of the intraday trailing accounts, hey, still a good deal to be able to get your feet in the door for free. And then when you pass, you're just responsible for the activation fee. I don't see the I was trying to see the view legacy accounts right there. Right there. These are the legacy accounts. They back. Remember when they used to look like this right here? When you used to go down the used to scroll through the what's the name here? It used to be like a scrolling with I was gonna say you used to be able to pull it, but you still can't pull it. These are the legacy accounts. They are back for a limited time. Right? For a limited time. And you can see right there, the first month is $16.75 for the 25K, $16.70 for the 50K. And then y'all see the numbers for it. I like the 50K, so that's what I be going with. And then you can see everybody activation fee is $125. Right? That's the sale that they got going on right now. Right? So it's if you go for the 50K, $19.70, right? Plus $125. So you're looking at a pretty steep all in. That's like what it used to be back in the day. Like you're looking at pretty close to a little less than $145 all in. So now you see why I say, right? This is why I say that the best bang for your buck right now is that 100K at $59 all in, because getting a 50K, right? Getting a 50K, when you pass it, you're gonna be spending 145 when you get to the funded, right? But you can get 100K for $59 right now until the 29th. Right? The same amount of time that these legacy plans are gonna be up there for now. They saying they're not here forever, but for now, right? That's best bang for your buck. And that did just coming off while I was reading it, coming off top of my dome. I'm like, hey, that $59 is the best bang for your buck. All right. That's enough talk about Apex. Shout out Apex for, supplying me with coupon codes to distribute to the gang to give you an opportunity to get your toe wet. Get your toe wet. And remember, if you go shop over at Apex, please use code BIGSPIDER at checkout. Right? And yes, Dreamer. I appreciate that, man. Y'all give it up for Dreamer. Y'all please don't forget to get like for the algorithm and subscribe to the channel. If you don't forget to get like for the algorithm. Now my effects are so loud I can't even hardly hear me now. Hold on, let me turn my volume down on my. All right, let me turn my volume down. I turn my volume down to there. All right. So I hit my volume there. Now let's try this again. Let's see what it sounds like now. All right. Let's see what it sounds like now. All right. Let's see what it sounds like now. All right. Let's see what it sounds like now. All right. Let's see what it sounds like now. All right. I couldn't hardly hear because it was still playing. Let's try one more time. Now test. Now test. Okay, y'all. Test. That's better. It ain't drowning me out no more. Cause I know I turned my mic down yesterday because I was blowing people's ears away, and now it ain't drowning me out. Now, did Price do anything today that caught you off guard? Did Price do anything today that caught you off guard? I really ain't been telling y'all this lately. Y'all see in the beginning, y'all see the little ad for the Smart Money Manuscript, right? Smart Money Manuscript, link in the description if you want, if you want something from beginner up to advanced to help you fine-tune everything about your trading. That Smart Money Manuscript is down there. And don't forget, we also got that amazing, where is it? Have you ever watched Price hit your exact fib level, hunt your stop? That's the one I wanted. The magical Fibonacci tool. Trading secrets that feel illegal to know. Here, fib. Let him cook. We ain't talked about that one in a minute. The magical Fibonacci tool. We ain't talked about him in a minute. Link in the description below. Anybody that been thinking about joining the gang, shout out. I saw somebody pulled up in the gang yesterday. I think that was what's the name, homeboy? Dan the Man. I think that was Dan the Man partner. Cause Dan the Man said, hey, I know somebody want to pull up in the gang, and I see that somebody joined yesterday. But this the time to do it, man, because every first and third Sunday at 7 p.m. we're going back to the basics. We're going back to the teaching. I use air quotes when I say teaching because I'm not a teacher. I'm just sharing my understanding of price action and the ICT concept to try to help somebody else get that aha moment, right? So, hey man, tap in. It's time to tap in because we're going back to school. I gotta go to school. Who remember that? Who know what movie that come from? That's a throwback classic. That is a hood. I ain't gonna say hood. That is a African American classic, and you would get your black card revoked if you never seen this movie. But on there, the young lady says, I gotta go to school. What movie is that from? Come on. I'm not moving on until somebody tell me. What movie is that from? I gotta go to school. I got Cassandra. When Cassandra pulled up in the gang, I don't remember. I saw, there you go. Cassandra don't want to unmute and tell y'all, but Cassandra got it. Cassandra got it, y'all. The color purple. She said her audio don't work. Talk about my audio on the work. Bruh. Do y'all believe that? Rocket, take. You believe that?
Cap.
What? Hey, wait a minute. Do you believe her audio don't work? I'm gonna ask you one more time.
Cap.
Take said he don't believe it. Take said he don't believe it.
Oh,
And I don't believe it either.
no. No.
Look, hey y'all, look at the way Dan looking at her, y'all. Look at the way Dan is looking at her. look at Dan looking at her. Dan don't believe it either. Dan don't believe it. Look at Dan looking at her. Dan. Yeah, okay. Hey man, we gonna go ahead and get into it, man. I ain't seen. Come here. Get out of the way. I ain't seen nothing in the chat. I don't hear nobody saying that, so I guess Price did exactly what everybody expected Price to do. So I guess we really don't even need to do this right here. But welcome to the gang, Cassandra. I almost said Calandra, and that's why I had to pause for a second. Welcome to the gang, Cassandra. Officially, you was already part of the gang coming through the tube. But now you're officially a part of the gang in the behind the scenes when you have direct access to Lil Timmy Rogers. All right? Looking at price. Let's go to the daily chart. Let's look at the daily chart. We have been talking about this daily chart. We've been talking about this area right here for so long. Right? We're not even going to go back and talk about everything, but we will zoom in and look at our weekly range, right? We're going to look at our weekly range. We're going to get us a Fibonacci tool and put it on consequent encroachment, mean threshold. That line right there that you see that I just placed on the screen, that is the equilibrium of our weekly range, right? If you don't know what the equilibrium of the weekly range is, that is the halfway point. That is fair value. That is 50% between the highest price and the lowest price of a specific dispensation in time. And right now we're looking at last week's range, right? Why are we looking at last week's range? Because last week's range is our weekly range that we're dealing with, because we have started a new week. Whenever you start a new anything, you want to see where are you in relations or reference or whatever you want to call it to the last of that same thing. Like if you're starting a new London session, you want to know where am I in relations to the previous London session. If you're starting a new New York session, where am I in relations to the previous New York session, right? If I'm starting a new day, where am I in relations to the previous? You got it. So then we in a new week. Where are we in relation to the? Okay, y'all give yourself a hand. Y'all give yourself a hand. All right, so we are in a slight discount, right? We started out the day yesterday, roughly around equilibrium, right? And right now we're in a slight discount. Now that's where we are in our dealing range, right? And then we were eyeballing certain PD arrays, right? We had a premium wick, right? Which was a discount PD array from where price was at. If I just blew your mind and confused you with that, now it is a premium wick because it is the wick above the candle body for 720, Monday 720, but it is a discount PD array because it is below where we opened up in price, right? So you have a premium wick that's a discount PD array, because since we're above this premium wick, right, that means that the premium wick is a discount PD array. It's called a premium wick again because very good. Y'all doing good today. Give yourself another round of applause. All right. So we was watching that premium wick, right? We were watching this bearish, come here, wick. We were watching this bearish fair value gap right here, right? Why? Because this bearish fair value gap was our premium imbalance inside of our weekly dealing range, right? If we go back and I mark out our weekly dealing range right there, we see that that's equilibrium. Anything that's above equilibrium is a premium, below equilibrium is a discount. If you want to get fancy, and you think you're smarty, you can put it into quads, right? So if we come over here and we put it into quads, okay, and then we say anything between equilibrium and the upper quadrant is a discount. Anything between the upper quadrant and the high, a premium. This is a premium. Anything from the upper quadrant to the high is an extreme premium. From equilibrium to the lower quadrant is a discount. From the lower quadrant to the low is an extreme discount. If you think you're smarty, right? That you can do that right there. Okay, so we moved into the premium PD array on Tuesday, and we respectified, that is a word, we respectified consequent encroachment of that bearish fair value gap. I think I got it inside here. What date is that? The 16th, right? So we go over here and look at. Yes, we do. Boop. 16th right there. You see, from the high to the low, that line right there, that's denoting 50% of that bearish fair value gap. And we know that 50% of a bearish fair value gap is consequent encroachment, right? So we closed below. The bodies are respecting consequent encroachment on the daily time frame. We said if on a daily time frame and you're in a sell program, you want to see bodies closing below consequent encroachment of premium PD arrays, right? We said that this wick closing above consequent encroachment of that wick was allowable because we were coming up to our premium PD array. We came back to a premium of the week. On Monday, we failed to get to a premium of the week. On Tuesday, we got to a premium of the week. So then now we're watching to see if the first use case, that's the new fancy word Michael been throwing around. You get a new word. 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 First use case will be utilized to send us lower, right? Because its first use case is to send us below this swing low right here, right? We came down, we made the low. Monday, we traded up, created the swing low. Tuesday, we went into a premium and we touched the bearish fair value gap, whose first use case is to send us below the swing low right here. So we closed below consequent encroachment. Yes, that is good for the first use case of sending us below, right? We opened up here and we closed below consequent encroachment again, right? But wait, don't get too happy yet. Why, Tim? Why can't I get happy yet? Because we are still in the middle of the road. Yes, we are. We came down. Remember, we said don't throw the baby out with the bathwater, right? Remember that wick? That's a big wick, right? Oh, but don't forget over here, there's another one. There's another one. Remember this wick? Yes, that's a big wick too, right? We closed still above consequent encroachment of Monday's wick, and we still close above consequent encroachment of last Wednesday's wick.
So we're seeing discount sensitivity at the discount PD arrays, right? This discount wick. But Tim, why is that a discount wick? You said that was a premium wick. That's a discount wick because that wick is on the bottom of the candle, right? So when the wick is on the bottom of the candle, it's a discount wick. When the wick is on the top of the candle, it's a premium wick. So now that we're above, where see, came up here and we closed above consequent encroachment of this, consequent encroachment of that, they're now discount PD arrays. We're at a premium PD array. We open up, come down, we see discount sensitivity where at our imbalance below us. We're seeing premium sensitivity at our imbalance above us. Both of these are on daily time frames. Its first use case is to send us down here, right? This one first use case was to send us down here. This one first use case was to send us down here. These two haven't done that yet. This one is now getting an opportunity to try to do that. But now that we're up here, they become inversions. So now their job is to send us up here. They just switched teams. They jumped over. They hit the transfer portal and they left FSU and went over there to some school in the SEC somewhere that we care nothing about, right? So now we are ping-ponging in between two daily PD arrays that have jobs to send us in different directions. So which way are we going to go? Which way are we going to go? We don't know until the price decides to leave out of these areas, right? So, Tim, you always saying we don't know where it's going to go. I wonder why. Let's zoom out and see. Oh yeah! Now I remember. In the words of Miss Betty Wright. Is it Betty Wright or Betty White? Which one is it? Wright or White? Help me out.
It depends on what you're talking about.
Oh yeah, now I remember. The one that said on the song, "Tonight is the night." Tonight.
Oh, that's Betty Wright.
Right?
Right.
Okay. All right. There you go.
Yeah.
There you go. So we in this consolidation. So whenever you're consolidating, nothing is high probability. And that is our higher time frame on the daily chart. We are still in the middle of another road. Always in the middle of a road. Always in the middle of a road. Do anybody got any questions before we drop down to the intraday time frames?
With the wicks that are being used as, I know, representing gaps and arrays, is the same rule that follows? Is it to invert it? Is it a closure, or is it you can just wick above? Same rules apply as if it was a normal gap, so to speak.
So inversions is when you close on the other side.
Yeah, I know that. So even with the wick, same thing. We got to close above or below that wick to invert it. Okay, cool. Thanks.
Yes, the body's closing above or below that certain point, right? So for the wick, you're looking at, you can grade the whole wick, but with wicks, we're pretty much looking at, okay, using the consequent encroachment as that area of support. This is what's showing me I'm being support or resistance. So once you get above the 50% with a closure, you're looking at that consequent encroachment to be support. Whereas with a fair value gap, if you close above 50%, that's just showing weakness, right? But then when you close all the way above, that's when it becomes an inversion. But with the wick, You're just looking at that wick to be used as support or resistance. So once you get that closure above and you're not seeing that willingness to drop back down, okay, now we're using it as support, right? And what, okay, we're using that. I see discount sensitivity, right? And the way to like kind of train yourself to see the if we using it as support or resistance is to go back through price and look at time frames where you have wicks, right? Where you have wicks, and then go into the price and study what price did on the structure time frame and the entry time frame, right? Like we come to a daily chart, right? We come and we want to go in and study this wick right here. All right. So we're going to study this wick. We're going to make this wick blue. We're not going to extend it to the right. And we're going to show it from this time frame down. And then we just going to chop off everything else that we don't need, right? Boop. Because we only want to see the price that's inside this wick and everything before it. All right. And then let's look at, since we were monitoring this that day, we want to highlight that because that was our point of focus, right? Point of focus. This, we looking to see, do we get premium sensitivity here? And do we get premium sensitivity here if we make it there, right? Point of focus, what we look for, the point of focus in this case, since we dropped down, being bearish, this point of focus right here, this is what your upside target, where your upside anticipatory reactionary point, where you want to see, okay, once we hit this, do we have a willingness to continue this sale program? All right, this is a daily time frame. So let's drop down to our 60-minute. Why? Because on the daily time frame, that's our narrative. Drop down 2 time frames to look at our structure, right? Y'all know how I like to break it down. Your narrative time frame, 2 time frames down, structure time frame, 2 time frames down, entry time frame, and anything below that would be a fine-tuned entry. So daily, 60-minute, 5-minute, 1 minute, 30-second, 15-second, however low you want to go, right? Narrative, structure, entry, fine-tuned entry. Anything lower than your entry is fine-tuned entry. All right, let's go to a 60-minute time frame. Get out of there. All right, 60-minute. Well, that right there is our structure time frame right here, right? So as we see here, this is our anticipatory reactionary point we was watching for price to draw up into, right? So when we opened up this day right here, let's put a line there from when we opened the day, right? Daily open, make it fat, make it orange. We got, I said that like that so Deborah can understand. We're gonna make it orange, right? So we make it orange, and then we can see that once we trade it up into our anticipatory reactionary point, right, we got some extreme premium sensitivity, right? But prior to trading into this right here, right, who can notice, I think we talked about this at this point right here, right? Who can notice what set up here? We did talk about this, so y'all should get this right off. Who can, before we got this wick up into our anticipatory reactionary point, who can notice what set up prior to this move down right here? What set up there? What happened prior to this pop up above there? What set up? The opportunity to look for a what? I talk about it. I say I'm trying to build my confidence in it. Mike could talk about it. I've been studying it. I want, but I just ain't built my confidence to be able to take it yet. Don't nobody remember.
Turtle soup.
There you go. Y'all give it up for it. Y'all give it up for Deborah. Now, Tim, what do you mean? You see, it's we opened up here. This is our anticipatory reactionary point up there. What's in between here and that anticipatory reactionary point. We have a clear area with buy side liquidity right there. Price, we ho-hum a little bit here, then price rallies aggressively, right, into that buy side liquidity, laying a body closure above it and all. And then we form a short-term high. 1, 2, 3. A 3-candle pattern where the candle in the middle high is higher than the candle to the left and the candle to the right. That gives us a swing high. That swing high is a short-term high right now, because at this point, before anything happens, there's no high over here that's lower, so it wouldn't be an intermediate term high. So an intermediate term high would be a short-term high with a short-term high that's lower and a short-term high that's lower, and he'll smile because he's important, right? We don't have that yet. So once you see that short-term high set up, especially when it gives you a nice command and push through buy side, and your thesis is bearish, right? And you're right there at your anticipatory reactionary point. We can be touched it or very close to it, in it, whatever. You're at your anticipatory reactionary point, right? And you get that short-term high right there. You're watching that high for opportunity for a turtle soup sale, right? And then you see here we pop up above that high, touch our anticipatory reactionary point, and then get extreme premium sensitivity. Right? So now you're studying that high because you want that to act as a smart money reversal, right? So, and you see we come down into a bullish order block, rally back up, respect consequent encroachment. That candle closes, right? That candle closes well below consequent encroachment of that wick that we're watching, right? We're watching that wick to see if it's our smart money reversal. We trade up, we see extreme premium sensitivity at that wick. So you're looking for sensitivity, like candles wicking off of it. You're looking for body closures right below that. It's like these are all the things you're watching, you're studying to see, is price telling me what I want to hear at this anticipatory reactionary point, right? And it is. Now let's drop down into our entry time frame, right? And you look at it. Now we see how it looked on our structure time frame, right? And we got that visual. We took screenshots. We got visual clues of what it looked like on the structure time frame. And then we come down to our entry time frame and see how was I able to participate with entering off of this here. And we see as we traded up into our anticipatory reactionary point, we see we came and had a commanding close above a high. Then we attack that high, looking for a turtle soup above it. Same thing we was looking for on that hourly time frame. It's the same thing we're looking for on this 5-minute time frame. The candle structure the candles themselves may look different, but the concept or theory or idea or logic or signature, whatever you want to name it, is all the same. Command and close above a high, right? Leading into your anticipatory reactionary point. Attack that high, right? Come back down. Boop, boop. Now you're watching this as the smart money reversal, right? Because you want this to be a turtle soup sale, right? We come down, bearish break in market structure, right? First BISI before you took that liquidity, that's an important BISI. When we close back down below it, we want to see that used as an inversion fair value gap. First SIBI as we take off, that's an important SIBI, right? If price got back to it, you want to see it hold it in the road. Don't go nowhere. We trade back up. Yes, we're a little bit sloppy on the closing above the consequent encroachment, but the bodies are telling the story. They're staying inside this balanced price range right here, right? That's your entry. off the 5-minute time frame. This is your entry time frame, right? Take the liquidity, break in market structure, retrace to a premium. Boom. That's your entry there on your entry time frame right here, right? Take notes of that. Look at that. You know, yada, yada, yada. Boom, bam, boom. Bing, bop, bop, boom, bop, bam. There you go. All right. And that's how you go through and teach yourself how to start to see it in real time, right? Because you want to see this how the hourly look after it's done. This is how the 5-minute look after it's done. If you use different time frames, this what the weekly look when it started out. This what the 4-hour look like. You know, this is what the weekly look after it's done. This is what the 4-hour look like after it's done. This is what the 15-minute look like after it's done. You use your 2 time frame method, right? And you teach yourself, okay, to make this hourly picture, right? Well, let's do this right here. Snap a picture. Snap, right? 1 hour. Come back. All right. Snap a picture. Snap. All right. So now you have went in, you made all your little notes, right? On these pictures, and you say, in order for me to make this hourly candle, this hourly fractal look like this is what it takes on the 5-minute. So when I'm watching price in real time, right, I see that I'm consolidating. I see I start rallying, right? I see I take out a high. I drop back down to a bullish order block. I trade back up into this wick, and then I drop down into the sell side liquidity. That translates on my entry time frame. So if I'm watching this line here is my anticipatory reactionary point. Now I know once I wick into there, right, this is when I start watching my entry time frame, right? When do I touch it? I touch it here, right? So once I touch it, now I know I have to be patient and let price show me what it wants to do. So it's going to break down, right? And in this case, it created an inversion fair value gap. It created a SIBI. Then it gave me a bearish break in market structure, right? Once it did that, it came back up into a bearish order block. It dropped down and then manipulated out some sell side, rallied up, right? And why did it manipulate this sell side? Because it needed rocket fuel to go up. So as it dropped down here, right, rallied up, then dropped back down there, right? What did it do? It was touching this, came down into this bullish order block here. It opened up, dropped below that low one more time, right? So we came up, right? We came down here, up, did some over here, right? And then we opened up, dropped down below the low one more time, right? Left those relative equal lows when we traded back down into our bullish order block again, right? Trading just below that low. Then we came up, pulled back to the midpoint right there. Then we rallied up into our area, right? So that's when we came up here, closed right there at the high, opened up the next candle, rallied up, and then gave up the ghost, right? Closed at the high, opened up the next candle, rallied up, and then gave up the ghost. So this open on the next candle, rally up, that's when we were entering, right? We were entering inside this wick right here. Why were we entering inside that wick? One reason, that was what the algorithm had presented to us. But the second reason is we were entering inside the manipulation phase. We were inside that when we came up there and manipulated that right there, the algorithm gave us an opportunity to get short in an extreme premium in the manipulation phase of the price run, and it gave us a chance to get an extremely high risk to reward, meaning low risk to reward, because we got this little bit of risk to go all the way down to those relative equal lows down there over here, right? Let us come all the way down over there. All right, that's how you go back and teach yourself how to start to see it in real time.
Let him cook!
Yep. I don't know how I got on that. I was talking about one thing with Yolanda, and then I started talking about something else, and then I started talking about something else, and I forgot what I was talking about with Yolanda, and then I just kept going on what I could remember at that time. Okay.
So, how we, we've talked about this a million times, how we stair step down. So say for instance, on that 5 minute, we broke structure, but we have to, where are we? Yeah. Okay. We, what part are we?
This is today. I'm not on the part I was just on a few minutes ago. This is just today. What was you want to look at? What was looking at a few minutes ago?
Yeah, just right quick, please.
Right now.
Okay, so yeah, everything always makes sense. It's I know the thing that would kind of probably still trip me up just a bit is how we came, and although this is the 5 minute, we got to keep remembering to look at our structure time frame. Even though we had a change in state of delivery, we broke that last swing low. We closed below it before we rallied higher. And that would, both of those are pretty good. And then I know we have that balanced price range up there. So even though we have, so to speak, a breaker and a change in state of delivery a little bit above, below it, we always have to allow for it to come back up to that area, right?
Yes. Anytime there's an imbalance somewhere in price, you hope for the low resistance move, but you have to allow for price to go all the way back to the deepest inefficiency, no matter if it's bullish or bearish. You always want to allow for that. You in the best case scenario, you don't want to see price coming here, because these the trap traders. I'm gonna get that off because they look kind of clannish.
That V, yeah.
These the trap traders. Ideally, you don't want to see price come here, right? And initially, we didn't. We came there and we dropped, right? We came.
See, that probably would have got me though, if I would, and just saying okay, but there and again, that's not looking at that hour to see any closure below last up close candles. That would have just been like, okay, we broke structure on the 5 minute. There's our breaker. We got change of state, boom. But then you go.
You talk about when it come here, trying to short there,
trying to after it come back up to that green line right up there.
Come here and come back
high,
like that.
Not that high up there at the green line.
Here.
Left. Yeah, coming back up into those change of state of deliveries, and I think you have a little bit of a there's a SIBI.
Yeah, this is a good short. That's a good short there. That's a beautiful short right there.
The problem is
if you're trying to hold it for down here.
Yeah. That's the problem.
Yeah, if you're trying to short for down there, then yes, you would. That's why I say initially it was good, but we're in these high resistance conditions. So when it comes back here, right, this is the time where you don't want to, like I've been saying lately, throw the baby out with the bathwater, right? Because just say if you was holding it here and trying to get down there and it come back and it stop you out, you can't get scared to still trust your process and go short there again. You see what I'm saying? You can't get scared. You can't get scared out of it and trust your process and go in it. Matter of fact, I was looking at a video the other day when Michael was going through something with his son and he got stopped out on a short and he went back in again. He was like, okay, they're going higher up. I'm going to short here now. And he went back in again on the short. I don't know when and where it was, but I just remember I was looking at a video with him talking to his son. And so this is a good scenario of that where you say, okay, I came down, I get short on this breaker and I come down, but it come back. And actually, you would have got stopped out if you trailed it to like break even or something. Actually, getting short here, you wouldn't have got stopped out. But if you trailed it or put it at break even, yes, you would have got boom. You would have got bumped out. But you can't you know, and this is the hardest thing to do. Getting stopped at break even or taking a stop loss and still trusting your thesis to go short again. That's the hardest thing in the world to do. So many times I've gotten stopped out and I say, man, I must have been wrong. And I flip my bias and I get stopped out again. And then I
And then
flip
it
my
goes to
bias
where you go.
again, and I get stopped out again. I flip my bias again, and then it go to where I thought it was, but I done got stopped out again. It's like I
Yeah.
keep flipping my bias instead of just trusting what I saw in the beginning. And you know what I'm saying? I done did that so many times. So many
Okay.
times.
So, and that, like I said, no, in low resistance liquidity, many times we might have just taken off and went and take those
Yes.
equal lows
Yeah.
down there. But
Yeah.
we have to allow for, especially in high resistance, if we get stopped out, being
Mhm.
able to turn and say this is high resistance, they, you know, trying again from that higher PD array.
Mhm.
Okay.
Yep.
Cool.
Yep. If it don't do what you expect it to do here, right? And it come back up, then it should do it there. If you're on side. Now, if you wasn't at a higher time frame anticipatory reactionary point and you was just trying to force this to turn around, then you're probably just on the wrong side. But if you're at a spot where the algorithm should be turning around, you had a premium PD array, you done did all your higher time frame analysis, and it should be turning around. If it stopped you out and you got an imbalance or even an order block that's higher, right, it should do what it's supposed to do up there, right? And if you're too scared to take it off of this time frame, one thing you can do is, right, I'm just gonna put this around here, right, is go to your fine-tuned time frames that we talked about, right? You go down to your fine-tuned time frames, and now when it comes back up, right, it's come, remember, this was your area up. Let's go back to the 5-minute real quick so we can see it, right? This is our balanced price range that we're looking at here. I'm just gonna mark out the balanced price range. Right, that's the balanced price range we was looking at right there. Right, I ain't gonna mark out the CB and the BISC. I'm just marking out the balanced price range. Now we go down to our fine-tuned levels, like getting a fine-tuned entry. So now when you get back to the fine-tuned entry, right, what do we see here? We see a failure swing, right? We come back up into our fine-tuned entry, right? We drop down, we go up, we fail to take out the high, we break down, right, with a SIBI, right? And now here we get a high resistance move here coming all the way back, deep, all the way back up into our order block, right? This is our order block here, deep retracement back up into the order block. We almost hit the propulsion block, right? Deep retracement back up into our order block, okay? So now we can be entering over here because it's showing you, right, I'm ready to go back down, right? Made a high, failure swing, breakdown with displacement. Now I can enter off of my fine-tuned entry. And if you're scared of this, it even gave you another opportunity here. Came back to that order block, right? So now at this time, you noticing, hey, we're coming all the way back to the order blocks. So this time frame here, it stopped me out because it came back up here into this order block. Now this time frame here, it came back to the order block. So when it drop again, right, it drop again, I'm waiting for it to come back to the order block. So now I'm shorting off the order block this time. You ain't tricking me here or there like you did on the higher time frame. I'm down here looking for a better entry, but whatever was happening on that higher time frame, I'm looking for the same thing down here because time and price is fractal.
Let him cook!
Oh my goodness. Oh my goodness. Hey, Yolanda pulling up with these questions, and I don't know if y'all understand what we just discussed right now. If you don't understand what we discussed right now, you might want to go back and rewind just this part right here and you put it on the stove.
Let him cook!
And let it simmer.
The order block in conjunction with the mitigation block makes it even higher probability, right?
Yeah. Anytime you got confluence, it's stacking the probabilities, right?
Okay.
It's stacking the probabilities because notice, right? Talk about confluence, right? This is
Right.
our balanced price range, right?
Yeah.
That's our balanced price range. Let's go in here, right? And let's darken this up right there, right? That's the midpoint of our balanced price range right there, right? When we came back up into our high time frame balanced price range, right? We wick outside, but even down here, right? The bodies are staying inside the balanced price range, okay? We make a high right there, right? We drop down, right? And when we go back up, we can't take out the high, but the bodies are still staying inside the balanced price range, right? When we come in here, we can't make it to consequent encroachment of the deepest wick, right? What is that showing? That's showing weakness. We can't make it to consequent encroachment, right? Then we drop back down, right? Once we drop back down below there, right? And we get back down below consequent encroachment of the balanced price range, right? Nobody's come back above balanced price range. Matter of fact, we touch it one time right there. Then we drop down, right? And we come back up again. That's what I'm saying. It's showing you I'm respecting the premium PD arrays. I can't get back to consequent encroachment, showing weakness, right? I drop back down, right? Taking out lows. I'm pushing through lows. I can't make it to highs, but I'm pushing through lows, right? I'm pushing through lows with authority. Can't even make it to consequent encroachment. Can't even make it to highs, right? When I do trade all the way up into an order block, I'm wicking back down. You see extreme premium sensitivity, right? And I'm closing well below mean threshold of the down close candles, right? You want to see them down, like when we trade up here and we get above these down close candles right there and we get that failure swing, we immediately drop back down below them down close candles right there. You see what I'm saying? It's like we're showing a healthy respect for bearish price action, and then the signatures that you're looking for, are we respecting? You know what I'm saying? Once we got above here, like we came here and we closed back above that, right? We're above it. What should it do? It should send us above this high, right? We trade down and we can't do it. We can't get back above that high. We can't even get the consequent encroachment, right? And then we come back down and close below it again, right? That's a signature there. Once we get above this, if we're bullish, that should send us above that high, right? It don't. We get right back down below it again. That's bearish, right? And then when we get back down below it again, we try again and we right back down below it again. And we can't get back to it, and then we leave that area, right? We come down here to the last down close candle of this order block. This order block here job is to send us back above that high, right? When we touch that order block, we can't even make it to that high. We stop at this order block. Extreme sensitivity in that bearish order block right there. Right there. Extreme sensitivity, right? And over here I was talking about down close candles. I'm sorry. I meant up close candles, right? We when we create these up close candles, we're going right back down below them, right? I was saying down close candles, but I meant up close candles. Sorry about that, y'all. But we're seeing extreme sensitivity, right? In the candles. We're seeing extreme sensitivity in the PD arrays. We're seeing extreme sensitivity as far as can't get to the highs or the premium PD arrays, right? So them all the little signatures that you're watching as prices going through, and it's telling you these little stories, right? But it's difficult to see it when you are on side and you're anticipating this, but it's extremely difficult to see if you have no clue where price should be going. So the first thing you want to do is have a healthy understanding of order flow and price delivery to know, okay, we're in bearish order flow. Now we've come back to a premium. We're at a premium PD array that should be sending us down. That's why y'all always hear me say this PD array's job is to send us here. This PD array's job is to send us there. So we understand what's the first use case and what's the inversion, right? We want to know the first use case and we want to know the inversion. We're looking for the inversion if the first use case is opposite of what the order flow is. So if you create a bullish order block during bearish order flow, right, you want to see us get below that order block and use it as resistance instead of using it as support, right? If you create a bearish order block when it's bullish order flow, you want to see us get back above that order block and use that support instead of staying below it and using it as resistance, right? First use is to send us up if it's bullish. The inversion is to send us down, right? That looked kind of like a person raising his hand. Oh, pick me, pick me. Damn, pick me. I know the answer. Pick me. I'm smart.
I got one more thing.
Mm-hmm.
So back to that area where we came back up to the balanced price range, you just highlighted. So yeah, will you enlarge that for me? The first statement was, like you said, I mean, at this point we have a lot of confluences. So your bet is that you're on side. So those opportunities as you grow your account can be used when you add on
Yes.
another contract, right?
Yes.
Okay. So now go to you know how we this last wick right above that consequent encroachment, but we only wicked. Okay. If you go left and you see that green, is that a long wick over there? Just a little bit.
Of where?
You're there. Is that a long wick? Right?
No. It's a wick coming down, but it's nothing going up.
Yeah, let me see it though, please.
What the?
Yeah, I just have a question because okay.
This
So
kind of
that wick, yeah,
mm-hmm.
that's considered. Would that be considered a discount gap, so to speak? And if it is, do you now consider it inverted because we close below it with displacement, and also balance because we have a SIBI in that area, so that's another confluence.
You talk about this wick right here.
Yes.
So you're asking, is that?
You see how that's so now that's a discount array.
Yeah. You okay?
We below.
Mm-hmm.
We close below it with displacement.
Over here.
Yeah.
Okay.
On this, like I said, I'm not trying to turn every wick into we looking, but I'm just saying as you're looking for confluences, it can be considered because we close below it, inverted, and balanced because we have a gap in that area as well.
Well, as far as like balance.
Because balance price, yeah, because it's a gap with another gap at the bottom portion of it.
When it comes to balance, it's kind of like a sticky thing. But
okay. So
let's just say if you got like two wicks next to each other, mm-hmm. that's a balanced price range. If you got a fair value gap here, mm-hmm. and then you got a fair value gap here, but then you got this wick that's covering that right there. Mm-hmm. That's pretty much a balanced price range. You see what I'm saying? Because you've offered delivery in both directions. Now, when you're inside this area, like here, you're watching mm-hmm. this to see if we got sensitivity. We get sensitivity here, right? Then once we get back down and create this right here, now we're focusing more so here, right, on that imbalance because we do have a SIBI here, because when we got this SIBI here, as we closed above it, as we traded down, we was watching the SIBI here and it didn't send us higher, right? So then as we traded down to here, we was watching it, it didn't send us higher. Now, if we didn't create an imbalance here, right? If we traded here and then this candle started coming straight back up, now we're looking at this as like just say an inversion to see if it's going to send us down. But since we created this, now we got something else to watch here, right? And then this right here is just more like confluence from later, not so much looking at it as, oh yeah, because in essence, all of this is a balanced price range because we're leaving. You see what I'm
Okay.
saying?
Yeah, we've offered buy side, sell side, and we've left. Okay.
Yes. Mhm.
So we wouldn't, like you said, necessarily use that wick at all.
Because
Yeah.
and the reason now, if we didn't create this SIBI, yes, you would still be
Okay.
watching that wick.
Okay.
You see what I'm saying? Because that right there is your imbalance. You will be watching that wick and you will be watching this wick. Because
Okay.
you see what I'm saying? This is our most current one, right? And this is the one we was just watching, because if you anticipate it to be support and you get below it, you're now anticipating it to be resistance. But since we created this, the algorithm is giving us something new to watch, right? And then when we hit here, right, and then we pop up here, now we're watching this, and this. We're watching all of these, because you never throw the baby out with the bathwater, but you're not looking at it as, oh, it's a balanced price range just because it's a wick here and a SIBI here. No, it's a wick that we was just watching inside of this balanced price range, because this was the last thing that we was looking to be used as support. So until we get, we was looking for something to be used as support. So until we get something else, now that we're below it, until we get something else that should be resistance like this, we're still going to look to see if that's used for resistance. But when we get something new, now we're looking for the sensitivity and the signatures here. And as you see here, we get a nice closure below consequent encroachment, get some manipulation, but we get a nice, all these below consequent encroachment, below consequent encroachment, below consequent encroachment, below consequent encroachment, even though we got the manipulation, right? So we're seeing the sensitivity here, but the wicks are doing damage, and the time of this wick is at 12:30, which is not an uncommon time to punish some people. You see what I'm saying? It's not like right at that half hour when we going into the top of an hour or the half. Remember what I always say, when I'm going into the top of the hour, or if I'm going to that 30-minute, I'm looking for that manipulation. Sometime that 30-minute will bring you back to a deep retracement, right? And sometime that hour will bring you back to a deep retracement or a quick wick. You see what I'm saying? So that's not uncommon for that to happen at that time, right? So all of this right here, like you say, it's just all confluences. You're stacking these confluences, and looking at it in hindsight, we can kind of start to form narratives that don't really exist. Then we just got to we got to remember, we got to be able to think about it in the sense of this right now. That's my, like, matter of fact, let me go back right here, right? This is what I'm watching. That's the SIBI that we just created, right? So I'm watching this SIBI, right? Looking at this range here, this SIBI is in the discount of this range, right? So unless we're like in super low resistance and we're looking at this bearish order block to stop us, I'm anticipating we may get back above this. So I'm watching this, right? So when we get our next candle and we close back above it, now I want to see if we're going to use it as support, right? Get my next candle, boom, I see we use it as support. Now that we're above it and we're using it as support, its job is to send us above this high. So now I'm watching, do we get above that high? What's in between us and that high, right? We got that, and we got this, right? We've already closed above mean threshold of that. So we're disrespecting that. So now this right now is looking strong, right? Now we got this and then that high. Its job is to send us above this high. Okay. Next candle come out. It don't tell me nothing, but we're respecting consequent encroachment of that wick, right? But we're still closing above mean threshold of this bearish order block, right? So it's still, I'm in the same place. It ain't showing me nothing different. It's just showing, hey, I still feel the same way, right? Next candle, right? We go up, we fail to get to consequent encroachment, but this is still showing I want to go up. It's not showing I'm breaking down. It's still showing I want to go up, but it's failing to get there, right? But we still got to wait because we don't know yet, right? Now, we can't even get it, and we've closed back below consequent encroachment of that up close candle, right? If you're bearish, you want to close below consequent encroachment, mean threshold of up close candles, right? We failed to get to this premium PD array, and now we've closed below mean threshold of an up close candle. Now we're starting to scratch our head, right? But we're not out of the woods yet. Why? Because we still closing above mean threshold of this order block right here, right? So we got to learn how to watch it, you know what I'm saying, in real up. We get another indecision. It still ain't told me nothing, right? Now we come back. We still don't know nothing. Still got inside bars, but we still failing to get there. But now we got a swing high that we haven't made it to. This right here, it didn't tell me much, but I do have a swing high now, right? Can't get to that swing high right there, right? I can't get to that swing high right there. All right. Then let's go here. Next candle, right? Next candle here, we're starting to wick down. Can't get to the swing high. I wick down into consequent encroachment of that wick that we was watching, right? Now we see discount sensitivity, right? And we also wick back down into that SIBI, whose job that was to send us up here. So now we got this, whose job to send us there. We got this, whose job to send us there, right? But look what we closed. We're closing just below mean threshold of that, right? So now, before we was on top of it, on top of this bearish order block, now we get a closer just below it. So now we kind of eyeballing. We still in between, you know what I'm saying, the tale of two cities, right? We're in between it. We got a bullish PD array that should send us up, a bearish PD array that should send us down. I say it's bullish because it's a discount wick that we're above. I say it's bearish because it's a bearish order block. All right, on the same time frame. Next one. Uh-oh. That right there said something. Boom. Heavy expansion, right? Command and close below the low, right? So now it's like that it done said something. The elephant done stepped in the pool. So now at this point, right, we want to see, we got the opportunity to create a SIBI that big right there. That SIBI ain't there yet. Now we know we got an opportunity to create a SIBI that big. All right. Now we're going to see, do we create that SIBI? Do we try to get an immediate rebalance? You know what I'm saying? Do we get a fake out and we run up after taking that liquidity? We don't know because we traded back down into a BISI, right? The first BISI after leaving this balanced price range. So now we trying to see what a going zone. All right. But this said something, right? Now, boop. Uh-oh. We didn't even try to go up. We opened up and went straight down, right? Real heavy. Now we got our SIBI. We created that SIBI that big, right? Now we said, okay, this right here bearish. I got a bearish breaking market structure with a SIBI, right? Now I got a mitigation block right here with a SIBI, right? This is bearish, right? This is bearish. Mitigation block, SIBI, change in the state of delivery, all of that right there, right? We got everything. Right, we got everything. We got change in state of delivery. We got this right here and here. These candles going up there, right? Once we came up here, once we come down, offer that price right there. That's our change in the state of delivery right there, right? All this, all because right here, boom, boom, right? This right here, that's your bearish order block there, right? You got a propulsion block here. You got an order block back there. But for this move here, this is your bearish order block. That's your change in the state delivery right there. So I got a change in the state delivery. I got a bearish order block, right? I got a bearish fair value gap. I got all of this stuff right here. So now this right here was the last thing that I was looking to use as support right here, right? Nothing about that changed until we got this fair value gap right here. Once we got that fair value gap, now I'm looking, instead of looking for this to be my resistance, I'm looking for this to be my resistance because I want the low resistance move, right? But just because I want the low resistance move don't mean I won't get the high resistance move, right? And what's the high resistance move? Going back to my order block, right? So now what do we say? This right here is our order block right there. That's our, let me change the color of this. Make it red. I'll make it red. It's right here. Turn this orange there so it ain't so confusing. Got too much going on right now. All right. So that right there, this is my bearish order block right here, right? So I got a bearish order block here. I got a propulsion block there, right? I got my fair value gap here, right? So low resistance, I want price to come no more than there and go down, right? Extreme high resistance, it can come all the way back to the last up close candle of my order block, right? But I don't want to see a closure above mean threshold, right? Don't want to see a closure above mean threshold. I'll do this right here. Right, so it can come high resistance, it can come all the way back to the last up close candle of my order block, but I don't want to see a 1 minute closure above mean threshold of my order block because this is my last line of defense to that high right there. All right, next candle, indecision. It traded up into there right where I wanted it to go, right? So now I'm in the trade here. If I'm trading off of that, I'm in the trade there, right? For this gap here, my mandatory stop is above there. My safe stop is above the high of the swing high of the price leg that it's in. All right, so boom, I'm in the trade there. Indecision candle pissed me off because it ain't told me nothing, right? Get my next candle. Okay, I'm happy now. It seemed like it's working for me, right? Next candle, coming back up, right? It's coming back up into it. No harm, no foul, right? Next candle, made my duty hold tight, right? Made my duty hold tight. But what I said, high resistance, I can come back to the last up close candle of my order block, but I don't want to see a 1 minute closure above mean threshold of my order block, right? All right, okay. Didn't get, so made my duty hold tight, came to my last up close candle, nice closure, respecting consequent encroachment. I mean, yes, consequent encroachment of my CIBI that I entered in on, right? Got my duty hold tight, respect mean threshold. All right. Next candle come up. Yeah, nothing, but I'm happy because I'm still looking at the fact that we were respecting that, and now I'm focused in, I'm locked in here. I'm locked in here. Don't want to see body closures above that, right? Don't want to see body closures above that. Next candle, oh, I'm getting real happy now because it's moving in my direction, right? And then candle by candle. Oh, beautiful. For me, little Timmy Rogers, right? I entered here, right? Oh yeah, I'm gone. I'm probably gone off that. 35 points. Oh yeah, I'm probably gone off that. But if you're not me, you ain't just Scalp McGee, right? And you looking for more, right? We're moving forward here. All right, next candle. Yep, next candle. Now, what I'm looking for is, I'll just do this right here because I'm let it play out for a while. Okay. All right. It's here, right? You entered here, right? This is where you entered, right? Depending on who you are or how you trade, right? You entered there when if price comes back up, right, to this CIBI again, you can add there. And why am I saying that? I'm saying that because when we hit the CIBI here, this is just what I like to call a first touch, right? This is a first touch, okay? The way Michael teaches his concepts is create it, trade away from it, and then come back to it, right? That's kind of like the way to utilize them, right? Getting it, creating it, and getting right in, like right here, right? That's like a first touch, getting in quick. I'm looking for super low resistance, not a whole lot of back and forth. I'm entering here and I just want to see it fall straight. Like here, I don't want to see it. I don't want to see it come all the way back up there. I want to get in, keep going. I want to see it move just like this, right? But if it comes back to it there, that can be an add, like you say, add in right there. Now, if you add in the same spot, it's not gonna bring your dollar cost average down. If you're adding in the same spot, if you add in, like you see, if it came back to consequent encroachment, and you be like, okay, I'm gonna add some more there, it's gonna bring your dollar cost average up, because that's gonna give you like a DCA, because you're entering in on a higher point than you did before. But you can add there, right? Now, you don't want to add any more, right? This is where you enter. If this is your target right here, right, you don't want to add on anything below this right here, right? Because you're adding in a discount, right? Anything above here, it's okay to add. Now, anything above here is going to bring your dollar cost average down, but you don't want to be adding if you're below 50% of your target, right? Now, let's just say if your target was all the way down here, right? Now they give you a little bit more room, right? You come down here, you wick out this low, right? Anything above here, like even if you trade it down and came back up, anything above here, it's okay to add, right? If you know you're on side, if you still trying to go down there. But I don't like adding, like, if I'm too far away from my entry, because I don't want to bring my dollar cost average down. Now, I will say, if you went in with 2 micros here, right, adding 1 micro down here is not going to affect your dollar cost average as much as if you have 1 mini and add 1 mini here. That's going to be a total different. Like, if you got 1 mini here and you add 1 mini there, it's going to bring your dollar cost average pretty much to here, right? But if you go in with 2 micros here and then go in with 1 micro there, your dollar cost average might pop to there, because it's you're going in with like half of the size that you initially went in with. So it's not gonna bring you all the way. It's not gonna cut your average in half, right? It might bring your average to like right there, because you're instead of, if you go 2 and 2, then it'll bring your average right there. The same thing as putting on 1 and 1, right? But if you went in with 3 micros here and added 1 micro there, right, then it'll probably bring your average down just a little bit. It's not going to drop it drastically as if you adding in with the exact same size, right? If you add in with the exact same size, you want to be doing that right around your entry or on a DCA that you absolutely trust. You know you're on side and it's just coming back and giving you an opportunity like this right here. I don't know. I tried to talk about a couple of different things that you asked, and hopefully I answered whatever you was asking me.
Yeah, you answered it all. It was just that was good clarification on the wick.
All right, then. So,
and then even more detail of how using that other wick's 50%. Once you like displace the below it, now you don't want to see it get above that other wick. So this is all good. Great action.
Yeah. And this is what I do every day. This is what I do whenever people be like, Tim, how do you see it in real time? Just like this. Everything that I just walked through. Well, y'all know, because y'all see when we be doing our tape reading sessions, y'all see certain things I highlight. I highlight this. I'll be like, okay, for the bullish thesis, this is what we want to see. For the bearish thesis, this is what we want to see. Okay, we're watching this wick. Okay, we're watching. Y'all see the same thing every day. Same thing I'm sitting here saying. Y'all see, this is what I do. I go in, I grab it up, and okay, we're watching. Like when we be watching price, I be sitting there running my mouth, talking about some of everything under the sun. And what were we at? Let me see. I don't know. I can't remember where I was at. That's today. I was over here. Okay. Right. I'll be talking about everything under the sun. Right. And we'll be watching this 1 minute chart right here. Right. And we'll have like a 15-minute chart over there, 5-minute chart over there. And then I'll be cracking jokes on Deborah or something. And then I'll be like, okay, we watching, I put a thing on there watching this wick right here. Right. We're looking at this wick. Right.
My question was, what was the higher time frame PD array that price traded back into to originally take the sell?
This right here. That's what we was watching right there. That consequent encroachment of that daily wick. That was the consequent.
Thank you. That makes sense.
That was the consequent encroachment. That was our anticipatory reactionary point right there.
Thank you. I was like, okay, I'm lost. Wait a minute.
Yeah,
what did the trade back up into? Okay.
That was our area where we anticipating price to turn around here. If it didn't turn around here, we was looking for okay, if we get, cause this was our weekly premium PD array, right?
Right.
So this is our upside target for the week. When we get there, we want to see something that pushes us back down, but we got to get through this first. Right, so we watching this and we watching this. So we get here. If we start seeing signs that it wants to drop, we're trying to trade off of this. But if it don't show us signs that it wants to drop, then we're waiting for it to get here. Then look for the signs that we want it to drop. But so once we got there, right? So once we got there, I'm going to chop this off so I don't have to keep zooming it back out, right? Like we did last time. Boom, right? So on this hourly candle right here, this 9 a.m. candle, once it trades up into there, that's where we're right. Soon as this hourly candle trade up into there, now we're dropping down to our entry time frame, right? And because this is when that candle open up. So here, boom, right here. Now we're watching at this time here to see, this is our area. Do we show signatures of wanting to go down, or do we show signatures of wanting to continue into the bearish PD array? Because this is in between us and there. This is our weekly target, right? So we take off, creating a bullish fair value gap, taking out this high right there, right? Then once we hit our PD array, we come back down and create an inversion fair value gap of this. Right, that's not bullish. Like creating a bullish fair value gap, taking out liquidity, and then immediately creating an inversion, that's not bullish. And then we created a SIBI right in line with it, so that gave us a balanced price range. So now, based off the fact that we took liquidity, created a bullish fair value gap, the first bullish fair value gap, the first bearish fair value gap, these are important fair value gaps. Balanced price range, breaking market structure. Now this should send us down because this is a bearish signature. So now, so now that's why we're looking for reasons to sell in here. And we initially started this by saying, okay, we come down, taking this short right here. That's what we want for the low resistance, because these are our trap traders, right? We call this our trap traders. When we make that bullish fair value gap, immediately create an inversion, it gives us that V shape. That's where the trap traders are. So when we come back to that balanced price range, we want price to go. But in this case, if we would have, it would have come back up to this area. And if we trailed to break even, we just got stopped out, right? But to trust in our thesis, we coming back here to the area where we have to allow price to come to, and then we going into the lower time frame with the 1 minute is our fine-tuned entry based off the daily hour 5 minute, because the daily is your narrative, Hour is your structure, 5 minute is your entry. Now we're going to the 1 minute because we want to fine tune our entry because we got stopped out at break even on our entry time frame. So now once we go in there, we already understand what's going on from the higher time frame. This is the reason for wanting to short. This is the 5 minute area from our entry time frame where we're looking for fine tune entry because we got stopped out at break even. And then we come into our fine tune area. We ain't looking for nothing different. We're looking for the exact same thing, right? We go up here, right? Trade back down, get a failure swing, right? Instead of getting a breaker like going up and getting a breaker, we're getting a failure swing with a mitigation block, right? Failure swing, displacement, fair value gap, right? And then this here, that was the first touch to go down, and this is the way where you created trade away, right? We came down, we did something. What did we do? We came down into a bullish order block. This bullish order block job, if price is bullish, is to send us back above this high, right? Since we're bearish, because we are looking for reasons to sell, because we think that's where it's turning around, and we think that that's our smart money reversal. That high should not be touched, right? And we're back up here and we're not showing a willingness to touch that high. So when we come back to that bearish fair value gap that we created, right? If we didn't get this entry, we coming back there getting an institutional order flow entry drill, right? Why are we getting it like that so viciously now? Why? Because we have fully repriced it here. So there's nothing left for the algorithm to do up here. Very efficient delivery. Create an imbalance.
But couldn't you have traded that as an OTE right there?
Talk about here?
No, if you go up, if you
Talk
go
about here?
back, I can't see the chart.
Talk about here. Now OTE has a very specific criteria before you start looking for OTE. Right? You're just not gonna pick any leg and go to like a 62 to 79%.
No, it took out, it broke structure. You got a market structure shift. You got a market structure shift. Price went back up to it. So I don't know. I'm seeing an OTE entry here.
But what I'm saying is you're looking for the OTE at a very specific time. You're looking for the OTE after you get that first stage of accumulation. You're not looking for the OTE up here at the low risk short.
Right, exactly.
You're not looking for the OTE up here at the low risk short. That's why I said if you asking about OTE over here, then that's possible, but you're looking for the OTE after you're leaving that stage of accumulation. You're not just looking for, okay, we got a market structure shift, I'm looking for OTE. No, you're looking for that smart money reversal, that low risk short. When you go into that first stage of accumulation and you leave, now you're looking for that OTE after leaving that first stage of distribution or that first stage of accumulation.
Gotcha. Understand that. Yes.
Right.
Okay.
So it may work as you're hitting a fib level that the OTE will be used for, but you're not really getting an OTE. Just like a lot of times people be like, oh, I'm getting this or I'm getting that. It may look the same, but if all the criteria not there, you're not trading that. You're just getting lucky. You see what I'm saying? So if you're not following all the criteria that says this is what this model is, you're not trading that model. You're just getting lucky that it happened to hit the same thing. And that's why a lot of times the people, they will be like, oh, I can't explain why it didn't work, because you're looking for it at the wrong time. Just like Michael be like, you don't really know what an order block is. You see what I'm saying? Like people trying to use, or an inversion fair value gap. People trying to use every fair value gap that you trade to the other side of as an inversion fair value gap. But it's a specific criteria that you want to look for that inversion fair value gap, right? Meaning it's that first imbalance, right? That's created when you going and engaging liquidity, when you expanding and touching anticipatory reactionary point, and then you trade back on the opposite side of it. Now you're looking for that to be used as an inversion fair value gap. Why? Because it was that manipulation. It's fooling you to think, oh, I'm displacing in this direction, right? But I'm really just setting a trap so that I know where to come back to so I can get short, or I'm displacing in this direction, but I'm really just setting a trap so I know where I can come back to and get long. You see what I'm saying? So it's certain like you can't just come, like some people, they'll look at, let's just say, let me see. Let me find a spot that's got like multiple invert. Let me see. I can't find now right now, but they'll find a spot that's got like 2 fair value gaps back to back, and they'll be looking at each one of them. We close back above it. Oh, that's inversion fair value gap. Close back. Oh, that's invert. No. Every fair value gap you close back above is not going to be an inversion fair value gap. Now, every PD array has an inversion aspect to it, but you just can't call every fair value gap that you close back above an inversion fair value gap. It has to have a specific criteria that goes along with it that make it an inversion fair value gap. Right. Oh man, look, I just noticed this right here. Y'all remember earlier today during the tape reading session when I was talking about, what did I just delete? What did I just delete? I didn't want to delete the wrong thing. Yeah, I deleted the wrong thing. Don't want to delete that. All right. Y'all remember earlier today when I was telling y'all about what I'm studying with the order blocks, right? Now I had 10 o'clock marked out, but I deleted it. Right. And I was looking at bullish and bearish ones, but I was only highlighting the bullish. Right. So all right, I was only highlighting the bullish ones because I didn't want to have so many boxes on my chart, right? But remember when I told y'all I was studying, right? Tell me why them things was hitting today, right? Now we was on live together for this one here, right? The first one right there after 9:30, right? We came up, we talked about for the bullish narrative, using that as support right there. We saw how that handled beautifully, right? Now this right here was 10 o'clock. Notice we didn't offer that opening price until all the way over here, right? We didn't offer that opening price to all the way over there. That's why I took this, like I end up deleting this one because we took so long to offer that opening price, right? We took so long to offer it, but I was just watching it, right? I think I put a line there and I was just watching it, you know what I'm saying, throughout. I was peeking at it on my phone, right? And then this is the one from 11 o'clock, right? Now follow me. The one from 10 o'clock, once we offered that price, right? Look what we came down to right there. Look what we came down to right there. Right? And then once we broke down below, right, the one from 11 o'clock and the one from 10 o'clock right there, right, we was consolidating there inside the one from 11 o'clock, poked up right there to mean threshold of the one from 10 o'clock, dropped down back to mean threshold of the one from 11 o'clock, back to mean threshold of the one from 11 o'clock, back to mean threshold of the one from 11 o'clock, right? Drop all the way down here, the one from 9:30, right? Right here when we was like after 4 o'clock, when we was getting all that wicked. It was just wicking back and forth. If y'all was watching price like right at 4 o'clock, oh my God, price went crazy. But look at these wicks though. Look at these wicks though. Right? This is the one from 9:30. That's the one from 9:30 that we talked about. Right? Look at these wicks. It came down there, pushed back up, right? Wicked, going back, right? Now, let me come here. Where we at here? 3 o'clock. It's 3 o'clock there. Right here, that's 3 o'clock there, right? And then right here, this is the first bearish one, right? Because this 3 o'clock. Now, in this case, I'm not sure about it, right? So what I was doing, I was watching this candle and this candle, right? And the reason why I was watching this candle is because this was the first bearish fair value gap after 3 o'clock, right? This one here was including the 3 o'clock, right? But if you notice there, right, we wicked up into either one of them, no matter which one you was using, wicked up into it right there. And if you was using this one here, the first one after, right, using the first one after, right, if you look here, even when we wicked up into it there, dropped down, when we was getting all these crazy wicks, right, we was right there at the one from 930. Once we dropped down and took out that sell side right there, what did we do? We used the one from 930 as support. Then we rallied back up, and where did we stop? Where did the body stop? Right there, right there inside at the high of the one from 3 o'clock, right there, the one from 3 o'clock. First one out 3 o'clock. Then we hung out there for a little bit, and then we started to drop back down after going back up to mean threshold of the one from 11 o'clock.
Let him cook!
Oh my goodness. Oh my goodness. Y'all wonder why I be paying attention when the sensei speak. Y'all be wondering why I be paying attention when the sensei speak. Man, if y'all don't know what we just talked about tonight.
So did Michael say something about the first hour order blocks on every hour or something?
He was just talking
Did I
about
miss that?
he was just talking about first presentation. And with first presentation, make sure you I just hit my knee. It's hurting so bad. He was talking
I'm
about
sorry.
no, it ain't your fault. He reiterated the fact that when you're talking about first present, it's during a Twitter space. And he was like, when you talk about first presentation, you got to make sure you have a restriction of time, right? And the restriction of time is going to like denote that it's the first presentation, right? So if it's the first during something, the algorithm gonna understand that, and you can have a first presentation anything, right? So I've just been studying first presentation order blocks because in the scenario that he was talking about for because a guy came on asking about first presentation order blocks, and then Michael was like, okay, what you explaining is not a first presentation. Cause Michael was like, what's the window of time that you're talking about? And the guy didn't have a window of time. And he was like, okay, that's not a first presentation. And then he was like, go to your chart. He was like, what's the first down close candle after 930, right? And then the guy was like he was like, so Michael looked on his phone and he was like, okay, the first down close candle after 930 is, let's just say 933 candle. He was like, whenever you offer that opening price, that's your first presentation order block. You extend that out to the left. If your window of time is from 9:30 to 10, you're utilizing that as your first presentation order block between your window of 9:30 and 10, because that's the time that you mapped out. This is my window of time. I'm using 9:30 open to 10:30 because that's the first hour of trading. That's an important time. That's an algorithmic time and your first presentation. So that's what I was saying before. If price is bullish and you create a bearish order block, you want to use the inversion of that bearish order block, but you're still using that order block. If you're bearish and you create a bullish order block, you want to use the inversion of it, but you still using that order block because that's your first presentation, right?
But
And
wouldn't an inversion be a breaker block?
No, it ain't. Just because it's the inversion don't mean it's a breaker, right? The breaker is
inversion.
Like, cause everything has an inversion aspect to it, right? So a breaker is when price makes a delivery this way. Like a bearish breaker would be price making delivery this way, making delivery that way, taking out a high, then making delivery this way. This is where your bearish breaker resides. It's not so much of, because you see people coming in and be like, oh, I got a high, low, a higher high, a lower low. This is my breaker right there. No, that's not. You're just getting lucky inside this right here. You're looking for breakers at areas where price has shown you something. Price has done something. We have displaced and we've engaged liquidity. We've displaced, we've engaged, we have done something in support of some narrative, right? And people be just looking for, oh, I'm just looking for this one candle. But if you look, right, this right here, like even though we got this squeezed up, right, this right here, that can be your bearish breaker, right? Even though it's like a big kabuff duff of stuff there, you're just looking at this V-shaped area right here to stop price from getting back up there. But in its simplest form, right, you're looking at that last down close candle for the bearish breaker and that last up close candle for the bullish breaker. But it's based off of that narrative. Like, what has price done to make that a breaker? What has price done here to make this a bullish breaker, right? So even when I squeeze the chart up right there, you should still be able to see your breaker without being able to identify that individual candle. You understand what I'm saying?
Gotcha.
I think I'm tired of talking, y'all. I think I'm tired of talking.
Don't talk. This is a yes or no. That first presentation order block is still on a 1 minute, and we can also look for one on the 5.
Okay, back test it. I'm still.
Okay. Yeah, I'll back test it.
Yeah,
I didn't know if he had said like that first fair value gap.
You know what I say? You know what I say about everything. Price is fractal. So what happened on a 1 minute gonna happen on a daily, gonna happen on a 5 minute. So the short answer for me would be yes, but the mentor in me is go back test it and see, because I don't want you to take my word for it. I haven't back tested that, but knowing how price work, the short answer is yes. You see what I'm saying? Because just like how we just seen here, when we broke down, like not just here, every day when we go through price, and I say the same thing we looking for on the higher time frame, same thing, when you see the same thing, we'll be on the higher time frame. Okay, this is what we looking for here. When we go down to our structure, this is what we looking for here. When we go down to our entry, this is what we looking for here. But we're looking at the exact same thing on every time frame. Now, it may be a different confluence there, but we're looking for the same concept. Right? We look for the same concept. It might be a different influence. Sometime it'll be the exact same PD array. Sometime it might be a different one. But it's the same thing. We're doing the same thing. We're getting we either getting a breaker or a mitigation block. We're getting a failure swing. We're getting a Judas swing. We're getting a wig snatcher. We're getting something to tell us, oh, we're going from bullish to bearish, right? We're looking for that change in the state of delivery. Which different ways are we showing? Are we showing it with inversion fair value gaps? Are we showing it with order blocks? Are we showing it with change in state of delivery? Are we showing it with bearish Judas swings? What's showing us we are getting this change in the state of delivery? Bearish breaking market structure, bullish breaking market structure. You know what I'm saying? Just putting it all together, putting all the little stacks on stacks on stacks on stacks. Ugh. That's some high quality H2O. All right, man. Appreciate y'all. Tomorrow, Thursday. That's my day off. We ain't doing nothing in the morning. If y'all if you're in the gang, ain't nothing going on this Sunday. But on the 2nd, August the 2nd is our next study hall at 7 p.m. Friday on the 24th, day after tomorrow. Y'all know what that is.
Freebie Friday. Freebie Friday. Freebie Friday. Freebie Friday.
I did that just for Deborah.
All right, man. So tell a friend to tap in Freebie Friday on Friday at 6 p.m. Eastern Standard Time. If you don't know what Freebie Friday is, that's when we get together and look at price just like we did tonight. But you have an opportunity to win a Apex evaluation account. The codes that Apex have been so generous to give me to give out to the gang are good for any size evaluation account. Standard, any size standard evaluation account. The last sale was good because the activation fee was, what was it, $59? The activation fee was $59. So hey, that was a good time to win it. But even now, the activation fees ain't bad. So you can get intraday or end of day. If you're looking to save a little money on the activation fee, go with the intraday. Right now, the best bang for your buck over at Apex, don't forget to use the code BIGSPIDER when you check out, is the 100K. The 100K intraday trailing drawdown, you can get it for $59. That's no activation fee. You got to make sure you pick the right one. It's the 100K, no activation fee, intraday trailing drawdown. It's just $59 until the 29th. I think the email said, I just read it with y'all. That I saw the email pop in earlier, but I just read it, right? That's the best bang for your buck anywhere right now. I always tell you what's the best bang for your buck, even if it ain't with Apex. But that's the best bang for your buck right now. Ain't nobody out there touching that. Especially when you add in the fact that Apex give you 100% of your withdrawals in your PA accounts for 6 payouts. You get 6 payouts in each PA account for the new plans. The older plans, the ones that they just brought back, they on sale until the 29th. Also, those structures are different. The first 12,000 is 100% of the first 12,000 for those accounts, and the new accounts, it's 100% of the first of 6 withdrawals. So you get 6 withdrawals. They either gonna decide if they want to put you live or say, nah, just start back over. You can't trade that account no more after 6 withdrawals. The account either go away and you start over with a new eval and pass it, or you get switched over to a live account. All right, man. That's all I got. Appreciate y'all for hanging out with me. Hopefully y'all found value in this tonight, man. If y'all didn't, I do my best to try. I try my best next time. Hopefully you can get something out of it. If you did find some value in it, do me a favor, hit a like for the algorithm, subscribe to the channel if you ain't subscribed. Like I said, if you want to be a part of the gang, now is the time to do it. Link in the description below, because we going back to the study hall stuff every first and third Sunday at 7 p.m. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Run Your Grande. That's just me, Big Spider, if you don't blow us, man. Yo, y'all be safe out here in these trading streets, man. Gone.
Thank you all. Good night.